Hello guys, you are with the second video of how to be a successful forex trader in 10 steps. In this video we'll talk about the participants in the forex market, and more precisely for the big players that control the movement of the price. We'll take a look at the companies, the pension funds, the investment banks, the retail traders, central banks and governments. So without further ado, let's begin.
Large international companies that have factories and offices in different countries have to use different currencies, as they receive their profits in the respective currencies in accordance with countries in which they work. For example, we can take an American company that operates in Europe. This means that the profits it will make in Europe will be in euro currency. If the relevant US company wants to collect the profits in its headquarters accommodation in the US, it should turn to a broker or bank and reverse its profits from euro to US dollar. When this transaction happens, it will certainly have an effect on the exchange rate of euro to US dollar. As the company sells its euros to buy dollars, this creates greater demand for dollars and less per euro. In such a case, the dollar value will increase against the euro. The scale of the effect on the exchange rate depends on the amount that is converted from euro to dollars. For example, the effect of 50 million exchange will be much greater than the effect of 5 million. Pension and hedge funds often trade on the foreign exchange market for the purpose of long term for their customers. If you invest part of your money in a pension fund, then the probability that this fund will trade on the foreign exchange market for profit is quite high. Naturally, as they trade mainly long term, the risk they take is well below the hedge funds that are highly risky at their core. It is important to mention that about 70% of the daily volume traded is for speculative purpose, profit purposes. The remaining 30% of transactions are by businesses and corporations in order to hedge their operations in other countries and profit making. An investment bank is a financial services company that acts as intermediary in large and complex financial transactions. An investment bank is usually involved when a startup company prepares for its launch of an initial public offering, IPO, and when a corporation merges with a competitor. It also has a role as a broker or financial advisor for large institutional clients such as pension funds. Investment banks are best known for their work as intermediaries between a corporation and the financial market. That is, they help corporation issue shares of stock in an initial public offering or an additional stock offering. They also arrange debt financing for corporations by finding large-scale investors for corporate bonds. The investment bank's advisory role begins with pre-underwriting counseling and continues after the distribution of securities. The investment bank is responsible for examining a company's financial statements for accuracy and publishing a prospectus that describes the offering in detail to investors before the securities are available for purchase. Investment bank clients include corporations, pension funds, other financial institutions, governments, and hedge funds. Investment banks are one of the main market makers in the foreign exchange market. For those from you who do not know what a market maker is, this is a particular institution that creates a currency and provides the possibility to trade with it. Retail traders are small speculators like us who trade on a much smaller scale than institutions mentioned so far. The effect we have on the market is almost negligible in compared to banks and the many funds that exist. Retail traders, often referred to as individual traders, buy or sell securities for personal accounts. Retail traders typically invest in stocks, bonds, options, and futures, and they have minimal to no access to initial public offerings. Most traders are made in round lots, 100 shares. But retail traders can trade any amount of shares at a time. The cost to make trades might be higher for retail traders if they go through a broker that charges a flat fee per trade in addition to marketing and distribution costs. The number of shares traded by retail traders usually is too few to impact the price of the security. Unlike institutional traders, retail traders are more likely to invest in small cap stocks because they can have lower price points, allowing them to buy many different securities in an adequate number of shares to achieve a diversified portfolio. The primary goal of central banks is to provide their country's currencies with price stability by controlling inflation. A central bank also acts as the regulatory authority of a country's monetary policy and is the sole provider and printer of notes and coins in circulation. In other words, the central bank prevents the country's banking system from failing. Central banks are the main players in the foreign exchange market as they are responsible for the value of currency of the country concerned. When you start trading Forex, the reports published by the central banks and any notice or communication from a member of the bank will have a direct effect on the value of the currency of the country concerned. They are responsible for maintaining the value of the currency and thereby indirectly affecting unemployment, inflation, investment, and many other economic indicators of the country. Governments are an extremely important factor in the foreign exchange market by issuing government bonds and the imposition of taxes on different products. For those of you who do not know what bonds are, simply put, they are financial instruments that works on the same principle as the bank loan that ordinary consumers withdraw for the buying different things. Through the possibility of government bonds, governments borrow money from other governments or banks by paying interest on it. The bonds can be for a period of several days up to 30 years or more. An interesting example is Argentina, which was considering issuing bonds with a deadline of 100 years. These are, in short, the main players in the foreign exchange market who directly or indirectly influence the value of the different currencies.
Okay guys, these were the short descriptions of the participants in the Forex market. We hope you've understood how they affect the movement of the price and how they make their profits. If you like this video, hit the like button, share this video with a friend and subscribe for our channel. This way, you help us to improve the content we make. This is everything for this episode. Don't miss our weekly forecast and we'll see you next week. Bye bye.